You're good to go.
All right, good morning. This is a meeting of the Police and Fire Retirement Commission. A quorum being present, I call the meeting to order. We will be going into executive session, but first let's do those public items that we are able to address. Nikki, you will be taking attendance of who is present. We have heard from one commission member that due to a health issue of a family member, he will not be joining us this morning. And it looks like we're missing one other member. Minutes for the prior meeting, the open session were circulated beforehand. Hopefully each of you has had an opportunity to review those minutes. Are there any discussions, proposed changes? And if not, could I have a motion to accept the public minutes of our last meeting?
So moved.
Second.
Those in favor? Aye.
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 Anyone opposed? If not, those public session minutes are adopted. We'll now ask Mr. Jones, our consultant, to provide a general overview of the market. We will reserve discussion of particular managers' performance and discussion of any proposed changes in how we manage the funds to private session. So Ian, if you will provide that general market overview.
Sure. Good morning, everyone. So what I just shared on the screen is the meeting materials document, and we're first going to look at where the markets were through the end of May. And we have started off the 2021 with really fabulous performance coming from the public equity market. And the performance has been relatively soft and negative from the fixed income market. But you can see up at the top of the page under the year-to-date column, we had pretty much double-digit rates of return for domestic U.S. equities. And you can see the S&P 500 index, representative of large companies, was up about 12.6%. And you had better performance coming from the mid and small cap type of names. Mid cap index was up about 14.5, and small cap was up 15.3. We've seen a continuation of the turn which we saw at the end of 2020 with value leading growth. You can see the growth index, the Russell 1000 growth, was up 6.32, where the value benchmark was up 18.4. In a minute, though, I'm going to share with you performance in the month of June. And we've actually seen better participation from the growth side with some of the tech names that led in years past, leading in the month of June. But value is well ahead of growth through the end of May. And then the international markets were positive. The Europe, Australia, Far East index, representative of developed international markets, was up a little bit better than 10%. And the emerging market index was up roughly 7.25%. And then on the fixed income side, we had negative returns. The returns are negative because interest rates have gone up in 2021. And you can see the interest rate environment reflected at the bottom of the page. For instance, the 10-year U.S. Treasury began the year with a yield of 0.91, and at the end of May, the yield was 1.59. So about a 70 basis point increase in interest rates. And when rates go up, bonds go down in value. And so the aggregate index was down about 2.3%. Investment grade corporates were down about 2.8%. You still though had a positive return coming from the lower quality, higher risk part of the market, high yield. High yield was up 2.25%. And then global bonds were down 2.5%. Any
And
questions?
can you enlarge your screen?
Oh, sure.
It's really small.
Yeah.
Thank you.
Yeah. I should have noticed that. Is that better?
Much.
So then I put in here the returns. These are as of close of business yesterday. And we've had, in general, positive returns coming from the equity market. But a couple things to note in the month of June. Mid cap, represented by the S&P 400 index, was down about 1%. And value, represented by the Russell 1000 value index, was down about 1.5%. But then when you look at the year-to-date column, we have large cap stocks were up in general, up about 2.2 in the month of June, and up 15+% through yesterday. Small and mid cap stocks were represented by the S&P indices were roughly equal, up about 17.5%. You can see growth in the month of June is up 6.5%. And so now the differential is not as great. Value's up 16.6, growth is up 13.2. And then the developed markets were down a little bit in June, and they're just under 10%. Emerging markets have been up a little bit. They're up 7.6. And then when you look at the sectors, I mentioned technology. Technology has been the place to be in June, up 7%. And some of the like the financials, which is more of a value sector currently, was down 3.42. So that had a negative impact on the value index. And then you go down and look at, whoops, went too far. I like to throw in these FANG stocks because they were the big story leading up to the end of 2020. But you can see they had a pretty good month of June, and some of them have very strong performance year to date, like Google, which is Alphabet, the parent company of Google, up 43%. Facebook's up 28%. So those stocks have still had an influence on performance. Then there's some managers who don't own those stocks because they think they're overvalued, and that has an impact on the performance of their portfolios. And then I have to make this a little bit smaller so I can show it to you.
My favorite.
So this shows the S&P 500 index from October 9th of 2007. And October 9th of 2007 was the market high before the global financial crisis. And it shows where the market is today, and it details in pink any market correction of 5% or greater. And it shows where we have come from over the past 11 years. The S&P 500 index, I'm looking at this detail in the middle, has had an annualized return of 18.3%. And that is over 2,700 days, and a cumulative return of 528%. The market pullback back in February and March of last year is reflected here, and you can see the extraordinary results we've had since the market bottom in March of 2020. So I guess the takeaway here is that the market is not always going to go up. We're going to have periods where the market corrects, but with patience, over the last 100 years, the market has gone up more than it's gone down, but there are definitely some bumps in the road. And the question is, where do we go from here? The markets are pretty fairly valued, but there's also people who believe that with the current environment of us coming out of the pandemic and people starting to live lives again, people getting on airplanes again, going out for dinner, going shopping, that the economy and that companies are going to have pretty good earnings. So there's the belief that the market can potentially go higher, but there's also a concern about inflation, the price of goods and services, the demand that has been created by the stimulus that has been provided to both businesses and individuals, and just how much higher equity prices can go. So I think that Joe concludes my comments on the market.
Ian, just a quick question. Don't you think that all that optimism that you just spoke of the recovery, don't you think that's already priced into the market?
Well, I think to a degree it is. And, David, when you look back into 2020, the market started going up while we were in the trenches of fighting the virus. And there was nothing good happening back in like April and May and June of last year. But the market is a forecaster of the future, and people were optimistic that eventually things would get better. And that's why the equity market reacted in a favorable way, in that there was the notion that eventually we would get through this and that people would start living again. Now we're at that point. And so I think, to your point, you can say that that was sort of priced in as a result of the market being a tool of what is to come. Now, I think at some point, when the government comes in and says, we're going to start to raise interest rates, or we're going to buy back less in bonds, that will eventually be treated negatively, and people will be concerned that even though the economy is strong, companies have good earnings, the market will have the inverse reaction, where they'll say that eventually the market's not going to, we're going to turn over, and we may have a pullback even in a good economic environment because of the same sort of forward thinking that eventually the markets will not be as strong, or the economy will not be as strong. But that's sort of the great debate, and there's two different sides. Some people are more pessimistic, but seems like there's a lot of optimism. And when you look at indicators like consumer confidence, the consumer confidence numbers are really high, and that means that people are willing to spend money and go out and live life.
At this point, I would like to begin our conversation of the portfolio itself. And as it is a discussion of the investment of public funds, would want to do this in executive session. Can I have a motion to close the meeting so that we may proceed?
So moved.
Second.
Second.
Anyone opposed? Then please place this in closed